Hello, Bob Kendall here. Every day I go through my database showing you exactly how many buys and sells and what the percentage bullish is. I'm not sure I've ever made it clear how this works. Many of you seem to think that it's a lagging indicator because it comes sometimes after big surges in the markets, but I'm going to show you exactly what it is. Let's get into that. So this is the typical view you see of the database. You'll see the bullish percent on the models, both on the intermediate and the daily models. And I want to show you exactly what they mean. I'm going to utilize the equity only chart and break it down on exactly how this is actually a leading indicator, not a lagging indicator. So let's get into that next level. I'm going to show you part of the database that is on our portfolioexpert.com. This is the overview of the entire database only on equities only. So I want you to see this chart, and I'm going to break down what the percent bullish means and how it functions throughout a market cycle. So this is the breakdown of the chart we were just looking at. This is equities only, so it's just looking at the percent bullish on individual stocks only. But I want you to see a couple things. I talked to you about numbers of 22%, 28%, 42%, and around 68 to 72% is typically where the database will peak. What happens here is very unique. Let's go after the 2020 cycle. You can see I drew a red line at the 22% beginning of trend right here. The market starts to move up, and it went from 22% all the way up to about 50%, but right here is the 42% mark. That's the point where I always talk about we're going to get an extended rally. You can see here, this blue line here going up is the S&P 500. So you can see the participation rate. Once it gets to 42, it starts to extend. And that's typically when the market's going to continue to evolve in its trend. If we look all the way up here to the peak at 72%, you're going to see something very unique, and you'll start to see the database declines, but the market goes up. And let me explain a couple things that goes on. The initial first cycle trades that come in that get us up to the 42% are driving the primary markets here. As the percent bullish continues to increase to the peak, there are more stocks coming into the cycle. So every one of our signals have an expected holding period. And typically on intermediate, it is about 200 to 250 trading days, which is about 3/4 to a full year of holding period. It doesn't mean they will hold them that long, but it's typically what happens in this cycle. So as we go through this cycle, the first cycle of buys coming above the 22 up to the 42 and beyond are driving that first segment of this bullish move on the markets. The secondary cycle that comes in is when we get this boost up into the peak bullish percent. So let me explain what goes on here. What happens is when the database gets to the peak, at this time, the trades that came on early in the cycle are starting to roll out. And so you're seeing the first cycle trade liquidation, and that's why the database is going down. Meanwhile, there is a whole new set of symbols that are being held that are driving the markets further up until the second cycle profits hit. At that time, we start to get back around that 42% and below, and we start to see second cycle liquidation starts to happen as the market starts to decline. By the time we get down to the bottom, typically we'll go down to 30, maybe 20%. This is just the equities only. The full database that I show you every night has a little bit different metrics, but understanding how when we get the signals, how they carry forward both on the upside and the downside. So when we start to see the rotation, I talk a lot about this in that mid-cycle, that tells us that we're going to go to the next level and the markets are likely to extend those gains. Once we hit that peak level, we start to see the database decline. Then this is why we see basically about midpoint of the market cycle on the upside, we saw declines. As we came into 2022, we were in that big cycle decline. We were below that 42% level, and the markets continued to go down. Now we're beginning a new cycle, and we're now above the 22% level, which will indicate that we start the next cycle. When you're watching me cover the database, I want you to understand that there is a forward-looking element. It's not that it reached 72% and that's it, and now it's declining, the market's going to go down. These trades are going to last, and sometimes I will go through the percent fulfilled of the trade, where they are in the cycle, how much of the percentage of the average mean gain that they've got, and that helps you to understand where we are within the cycle, where we're starting that declining cycle or liquidation. And I often refer to it as a rotation. Many times we'll get a rotation right at the top, and then it will be followed by a full liquidation, and we'll go down to anywhere between 40% on equity only, down to about 20 is typically about it. And then we'll see a cycle begin again, and that's where we are now. So this is an ongoing cycle. If we get above 22, we start to see a bottoming cycle start. The next level, we would go to 42% on the overall database, and that would suggest that we're going to see a sustained market move. And then above that, we have the secondary rotation, which tells us we're in a full-blown uptrend, which is likely to last the better part of a minimum of 6 months, but most likely a year plus in the cycle. I hope this helped you to understand exactly what's going on when I talk about the database. I'm not sure I ever made that clear. Thank you so much for watching. Look forward to seeing you on the channel.